tech investments. There's been some significant growth and changes over the past few years, and it's been really exciting to see what strategies are and identifying the key investments. So without further ado, I would like to introduce you to our panelists. First, I'd like to introduce you to Andrew, who I can leave to you, Andrew.
Hey, thank you so much. It's great to be here with everybody. So maybe just a little quick introduction about my firm and myself. So I'm part of TRIREC, and we were founded in 2015. And what we are is a climate tech VC that's focused exclusively on decarbonization. So anything that helps in that respect, we'll take a look at, whether it's directly or indirectly. And that spans the whole emission spectrum from your transportation, electricity industry, so on and so forth. And we're a global investor, so we have quite a few investments in North America, a few in Southeast Asia, elsewhere around the world as well. And we invest from seed all the way to Series B, so pretty broad in our scope. We have about 20 active portfolio companies at the moment. And as for myself, I joined TRIREC in 2019. So it's been a little over 3.5 years now since I've been with the firm, and before that I was in Taiwan for 5 years, where I was covering the EV supply chain at CLSA, which is a Hong Kong headquartered brokerage. And besides EV supply chain, I also looked at things in the automation, display, and also data center spaces. And I think that's where my exposure began in terms of decarbonization and climate, and that's probably one of the reasons why I chose to be where I am today. And all the more grateful for that. And before that, I was back home in Montreal, where I worked a couple of years at Deloitte after I graduated. So it's a little quick little intro to myself and my background. So happy to pass it on to the next panelist.
Thanks, Andrew. That's great. Yeah, I'm sure one thing we'll all have in common is that passion throughout the years on sustainability. I think it's key in this industry. Yeah, brilliant. Next one I'd love to introduce is Toby, who I'm sure will explain is going to be joining while he's waiting to get through to the final stage. But Toby, if you could just give a bit of introduction to yourself. I think no worries. Toby has got a quick technical issue. Wouldn't be a webinar without it. We'll just move on to TN while Toby rejoins in.
Hey guys, my name is Ting, and I'm used to work for the Irish government. I'm the fellows by the Irish government and managed VC fund in Ireland. So most of my career is based in Dublin. I just returned to Vietnam before the pandemic and founded Earth VC. At Earth VC, we are a deep tech fund, and we focus on robotics, IoTs, new materials, and also we focus on this area, Southeast Asia, because we believe that this is the frontier of the fight against climate change. So until now, we have invested in 7 companies across this region, including some investment in Israel and also North America. So we hope that we can, use a venture capital firm as a mechanism to fight climate change. Yeah, thanks for joining. Thanks for inviting me for this one. And yeah, pass on to the next panelist, please.
All right, that's great. Yeah, I'm really excited as well to hear, especially post-pandemic and pre-pandemic, moving to Asia just before that. I know things have changed drastically since then, so will be great to hear about that later. Yeah, the next panelist is Hayashi-san from Japan. Please feel free to introduce yourself.
Okay, my name is Ryusuke Hayashi. As introduced, I'm from Japan. I'm working for a VC called Energy and Environment Investment. As the name of the company tells everything, we've been investing in energy and environment related startups since 2006. We mostly invest in Japan, but we do invest in overseas as well. And the size of the fund at the moment is actually we are in the middle of raising our own fund as well, and expecting the size of the fund to be around 250 to 300 million USD. And that's about the company. I'm talking about myself. I don't really have investment background with me. I joined the firm 3 years ago. Before that, I have been in the clean tech industries, mainly electric vehicles and batteries. And the reason why I joined the company is because the company has quite unique ways of making investment that always the investment expert and industry expert joins the team, create the team and make the investment decisions. So I'm more subject matter expert, understanding the technologies, especially in the mobility sectors. And so, Claire, please don't ask me too many difficult investment-related questions. I'm not really the investor by nature, but do understand technologies. And I think one of the issues that we have at the moment with investing startups in clean tech is that investors don't really understand technologies, and that's one of the big issues making the investment in clean tech. And looking forward to learning from other panelists today.
Yeah, no, definitely. I mean, very, very modest with yourself. Yeah, I think you definitely know the market. And I think one of the things that will be shown in this webinar, which we tried to show, is actually how important it is to have the variety within green tech investment due to the nicheness and the specificities of the roles. So it's really going to be great. And I think, you know, Japan, especially being the only kind of EV VC funding, there'll be a really good insights for it. So we are still waiting for Toby to join. When he's rejoined, we'll let him introduce himself fully. But what we'll do is just continue to get on. We do have a chat bar for anyone who wants to ask questions throughout, and we'll try to get to them at the end. We will try to speak to as much as possible, but anything that really is interesting, please let us know. I guess our first question, which will be the easiest, is what trends are you seeing in the kind of climate tech and green tech sector right now, and how are they shaping your investment strategy? I guess over to you, Andrew, first.
Gotta unmute myself. Yeah, thanks for that. Well, yeah, I think there's a few here. So we're probably speaking more to the Southeast Asia angle, right? And I think these themes are global in nature as well. So I think one thing that's becoming more top of mind again, I would say, is the EV theme, and probably more so in the two-wheeler space rather than your four-wheelers and sedans, because I think now you're starting to see I guess from a top-down perspective at least, the countries in this region, for example, like Indonesia, Thailand, becoming a bit more supportive in that sense. So for example, Indonesia, I think they've recently implemented a subsidy of about, I think, $5,000 for any electric vehicle that's purchased. And for example, Thailand, I think their corporate initiatives and I think just from a governmental perspective as well, reducing emissions has become a big topic for them too. So how that translates over the two-wheelers is that now people have the incentive to implement them, whether it's from your corporate perspective, but I would say mostly from your corporate perspective, because these solutions are pretty much ideal for their operations. So for example, in our portfolio, we have a company called Oika. So they are a electric vehicle two-wheeler battery swapping play, and they're active in Indonesia, Malaysia, Cambodia, and also ramping things up in Thailand as well. So I think you're really seeing that I guess that motivation from corporates to implement them. So you're getting a lot of inbound inquiries from people in the supply chain space, from people who are running logistics and just deliveries as well. Because EVs, I mean, in addition to just being less carbon intensive, also give the opportunity for these companies to implement some type of, I guess, software in their operations too, whether it's route optimization, whether it's trying to optimize where they want to place the charging stations and when is the optimal time to switch their batteries and so on and so forth. So I think there's a lot more momentum in that category now, and I think it's good news for everybody that is coming into the space, because I think from the startup perspective as well, we're seeing a few more players come into the space and want to capitalize on this trend. But yeah, I think that's one thing that we've noticed. I don't want to speak on more things, but I'll let the other panelists have a crack at it as well.
Yeah, definitely. I guess you mentioned the other kind of Southeast Asia countries. I guess, TM, I know you focus a lot within Vietnam. Have you noticed a similar trend?
Yeah, actually, I believe that that question is the hardest one. Define the trend. So because anyway, We are afraid of the facts that other VC jump in the bandwagon and we not in. But from the perspective of a deep tech fund, we recognize that depends on the industry. Energy will be the one that will be really hot within the next couple of years. And renewable energy, many types of new energies like hydrogens, and also wave energy and tidal energy. These things will observe the competition between a lot of companies. I got the same feeling with Andrew about the two-wheeler EV. And in Vietnam, I think you guys have heard of VinFast, who do the electric vehicle and also export it into America. And we also got some quite a few of two-wheeler EV company here in Vietnam, and also some battery company in Vietnam. But we also recognize that from our perspective, energy will be the first one. And the next one is like many other activities that can support the switching from fossil fuel into renewable energy, like platform that can help you to build, get loan to build your solar panel or something like that. Switching is something that will be the next trend. And last but not least can be AI machine learning. That's what I really believe in. And this will replace a lot of things and lead to the next trend of climate tech.
Yeah, definitely. I think with the energy one especially, I think one of the things that I've noticed a big element of, depending in the regions, is the government support, because it's so linked with the fossil fuel industry at the moment. I know in Japan, I think the government have recently put in some new protocols within clean energy. Hayashi-san, like, have you had any specific trends for that?
Yes, as a super big trend, like in any other places in the world, decarbonization is a big trend. And within this decarbonization context, energy storage is one of the biggest topic in Japan. Especially, as some of you may know, that lithium-ion batteries, which is the major energy storage technology today, was invented in Japan like 30 years ago. And there are so many researchers and engineers in the field. And I'm seeing not a few, but actually many young researchers from universities are working on new lithium-ion batteries technologies, and not only new cell development, but also manufacturing technologies. That's what we see as big issues, especially in Europe, where there are many battery manufacturing plants being built in the last 5 years, but the quality of batteries made there are not very good. And I'm hearing that like the yield rate of like 50%, so like 50% of batteries are wasted in there just because they have no know-how and technologies and experience of how to make batteries. And I'm seeing some entrepreneurs in Japan or even South Korea trying to come to this battery manufacturing technology area, and as a big trend here.
Okay, no, that makes sense. And I believe actually I've just seen that Toby has been able to join. So what I'll do is I'll let Toby kind of give a quick introduction to himself. Also, please feel free, Toby, to add anything you see about the kind of key trends in the market at the moment.
Hi, everyone. Again, apologies for being late. Can you guys hear me okay?
Yeah.
Yes. Okay. Yes, I'm a co-founder of Odyssey Ventures, APAC-focused climate tech, as it's now called. We founded this 5 years ago, but I've been in the energy and infrastructure industry for 18 years, initially in investment banking at Macquarie, in Sydney, and in Hong Kong. And then joined the founding team of Kerrigan Capital, which is a generalist energy private equity firm. And then as my career developed, I got into early stage investing. And I think right now, like venture capital and sort of energy, sort of clean tech, it's like I guess those two things have the really good conditions to converge. So that's why the last 3 years, especially, we've solely been focusing on the climate technology space, which I guess will come into the different trends and verticals we've been investing into and seeing. And some are more regional, but like I think by and large it's quite global as well, because climate is a global issue. I think it's just about like the speed of adoption in different areas because of the macro environments and the regulatory and policy push. The incentives are different, but we've been investing in transport and mobility, of course, alternative fuels to power that, such as hydrogen and sustainable aviation fuels, which is like a big thing that's developed very quickly because of the policy push. I think some of the co-speakers mentioned about energy storage. Definitely that's an area we're in as well. And the Tri-Rex also into the recycling aspects of it and repurposing of that. And right now I'm here on a site visit to Germany because of a carbon capture investments that we've made, and different forms of carbon capture, whether it is at the point source of emission, which is a different set of economics than direct air capture, which is what's in the atmosphere right now. And also there are also nature-based solutions such as using bacteria to capture. So I think like it's all very exciting that we're tackling decarbonization in different ways. I think right now, from the trends I'm seeing, the one with the really big regulatory push is SAF, because by 2050 we need 1,000 times the production volume we have today. So you can imagine the urgency of that, and so many airlines and even airports have made pledges for the use of SAF. So I think that's a very interesting topic that we're doing quite a bit of study on. Yeah.
Okay, no, and I guess that really leads us on to the next question. Obviously, all 4 of you have given very specific examples, but actually do differ, and it shows, I guess, the 2 main trends within the funding is the growth and the demand of it, but also the diversification, where everything is becoming more nuanced and more differentiated. How do you, identify the best startups to invest in? What would you say the main criteria is to use them, since it's become such a bigger market with such further nuances? Toby, I don't know if you want to start that.
Sure. Firstly, I think, as I mentioned, we look from a top-down perspective. Like we like to see in what verticals and where the regions are that have like really good policy tailwinds, which generally would bring up like a lot of investment dollars follow those trends. But I think within that also, because of our fund size, because we look at more modular than centralized like solutions. So where can we begin forming these like different ecosystems with a sort of smaller amount of capex, so we can get products out to the market sooner, where the technology readiness is high, I think, and we can commercialize like today. I think it's a mixture of investing in technologies that can commercialize today and some in technologies that are in earlier stages of development that can have the potential to leapfrog some of these more mature technologies. We like companies that already are testing their technologies with an anchor client in mind. So they often co-develop like solutions. So for example, right here, the carbon capture company I mentioned has piloted with the largest cement maker globally. So there's a very clear path to commercialization, provided you can jump through those scale-up hoops. And of course, comes down to strength of IP, and like to us in the VC space is still, because so many unknowns, like we're investing in the team, like essentially a lot of it's 50% of our due diligence. Do they have the years of relevant experience doing what they're doing? And so like when you consider a whole, that makes sense. I'll pass it on to the other panelists. Yeah.
Yeah, I think I agree with Toby there in terms of some of the aspects that we're looking at as well. I think another key factor to look at is, I think, interest from your corporates, right? I think when we look at companies I guess see their relevance to the industry that they are in. Just to see that the corporates are interested in them, and they're willing to put money into it, because I think number one, it helps solve whatever problem that they are facing. So which means the solution that the startup is providing is valid. And number two, I think it also speaks to the economics of that solution as well, because corporates don't tend to invest in things that would, I guess, make them less money or cost them more money. So I think that's a key thing in when evaluating these types of companies in climate tech, is that it needs to be financially viable. It needs to be another profitable company, because I think there's a lot of maybe confusion and talk about climate tech, is that we're investing in an industry that's more just for the good of everybody. But I think at our core, TriRec is investing in companies that will give a financial return. So in turn, that will, I guess, generate more interest from people that are in the space, from investors, and overall, I think this helps perpetuate more of this technology that can be implemented with these corporates. So I think that's it's just more of being a financially profitable business that could attract people to it. And as for the other things, what we're looking for, I think it's your standard things, right, in terms of team, market size, so on and so forth. But I think that's probably something that we keep in mind when we're looking at it from the climate point of view.
Definitely. I mean, you can see it, I think, from the past 3 years, the funding sizes and investments across the climate tech space has increased dramatically. Even just the Series A funding, they're getting higher. And I think it is because of that commercialization aspect. I guess, Tien, it would be really interesting from your side. I know you work a lot with drones and future mobility, which I'd say some people often see takes a lot longer to commercialize and has more of a long-term roadmap. How do you balance that when you're looking at different investors?
Yeah, actually, last year we made a startup from Switzerland. That can be an interesting story for you guys, which is they developed the solution of generating electricity from drones. So they fly the drones up to the sky on the Alps, and then the drone operates like a kite, and it's put out the light and generate some electricity. And it can make the small amount of power that can fuel the like 10 households up on the mountains. So we see that it's very potential, that solution, because it leads to the remote area, like islands, and also mountainous area like Nepal, like Switzerland, somewhere like that. So it's very potential. It leads to renewable energy, of course. And the founder is really interesting. He has spent like 25 years, analyze and also do that solution. But then this turned out that it's too long until we can exit from that investment, because it seemed like the chance that they can put it into the grid is like nearly zero if we analyze it. And also we compare to many other type of energy, and we recognize that nowadays the most got the most adoption, which is solar power. And after that can be wind. Wind can be massive, but it's still struggle, and also regulation in terms of Southeast Asia. So other type of energy like that, like drone energy, and also tidal energy, wave energy, things like that, we believe that it's taken long. So and how can we do tackle with that problem is that we raise the next fund, the longer fund. The bigger fund, longer horizon, and can wait more, because anyway we cannot forget those things, right? We need to anyway find a good way for us. But for just a 10-year fund, we need to operate a different way. We need to focus on AI, machine learning, robotics, things like that. And we hope that we can go IPO or also bring them to our M&A something. But for longer solution, longer innovation, we need to think like biotech fund, something like that, longer, like 15 years, things like that. But it needs more time to prepare. And we believe that there's a lot of innovative solution out there. The fact is that how can we use many different types of fund to support them and anyway, it lead to the good effect for the environment.
Mm-hmm. Yeah, definitely. I think that is a really good point about the actual impact of the environment. You know, that's what we're all doing it for. It's, you know, the thing that connects us. Hayashi-san, I know, you know, you mentioned at the start, you really are kind of an expert within the impacts and the environmental side. How do you go about kind of balancing the potential financial returns versus the impact it has on the environment itself? And what would you say is the most important for it?
I think as VC, financial returns, both financial returns and impact has to be, there. We need to chase both. And actually, what's good for environment is making money as well these days. So we don't really need to balance anything. Good business always has good impact on the environment and has good financial returns as well.
Mm-hmm. Okay, no, that makes sense. And when you're doing the environmental impact, I guess it's something that people probably find very interesting is, how do you go about measuring it? Are you looking at just the immediate impact it has as it growth, or kind of the 10-year, 20-year plan?
I think I can make 2 comments on that point. And our firm is the only Japanese VC, I think, participating in what's called internal impact capital management, which is the group of VCs, mainly North America, got together regularly to discuss how to measure the measure and how to assess the investment impact from venture capital business. And we are trying to learn a new method and new ways to monitor and measure the contribution from our portfolio companies. And before we make the investment, any investment that we make, we set clear KPIs of contribution and make the agreement with the companies that we are going to invest. And we keep following up the KPIs progress with the invested companies for until we exit.
Mm-hmm. Okay, that makes sense. And I know obviously that's with Japan. With the rest of the panelists, would you agree that you kind of follow the same trajectory when you're looking at that environmental impact?
I think for us, the companies invest in generally have a quite direct impact on emission reduction. So that's one of the key metrics we look at. For example, like we points was covered, but there's no more sort of direct than that. But generally, very sort of emissions avoided being calculated from the use of, for example, SAF instead of jet fuel, using a battery power solution instead of diesel. They're fairly sort of direct calculations so far in the portfolio companies that we invest in. Our approach so far hasn't been sort of overly burden the portfolio companies on too detailed reporting, at least at this early stage. I'd rather they spend the resource on actually rolling out the products so we can actually achieve actual results like quicker. And I think as they sort of the business gets more complicated, then a bit more discipline needs to be sort of introduced in this. Yep.
I think this is the biggest topic. If we talk about impact things, it's likely that we invest in something that sound to got good impact, but at the end of the day, it's been bad impact to the whole of the portfolio. So I do believe that we need to put more incentive and also more effort into building the better framework for what we're trying to do. And I believe that among most of the climate tech investor that we got work with, all of them got the same ideas about the hardest parts of the whole thing is that how to analyze the right factor of all kind of startup that we invested in. So it's really, really important. And I believe that we need to work together, many funds, many companies, and analyze. I believe that we can analyze every single tickets on the airplane that we partner fly away on the to go DD trip or something like that. We need to analyze the whole thing like that, very detailed, to see at the end of the day if we create good impact or not. Because after all, if we got more climate tech fund every year, so we need to get a better framework, and somebody need to raise the hand and put people together and build something valuable for in that in that field.
Yeah, I think totally agree with the rest of the guys here in terms of number one, needing a framework to work with, and it's probably difficult for it's speaking from Trirec's point of view, right? I mean, we invest quite early on, seed up to Series B. So yeah, I think just building on what Toby said, right? It's kind of difficult for us to ask our companies to sit down and spend probably a significant amount of cash, and more importantly, a lot of time in terms of figuring what exactly is their I guess emissions tonnage that you're able to reduce or avoid or sequester, so on and so forth. So yeah, I think we would rather that they spend the time building up their business, and as long as we know that they are going that general direction about reducing emissions is something that we are comfortable with at this point in time, because it's I think that just builds a good foundation for them to do so. From then they'll have the resources and time to put towards this goal. And I think maybe some of the approaches that some of the other firms are saying right now, you need to hit some type of hurdle in terms of the emissions that you want to reduce, or have some type of criteria that they need to meet, is sort of putting the development of the firm of the startup probably it's probably slowing it down, I would say, because they're asking these startups to do things in a sequential manner, whereas we would like them to do it in more concurrent, parallel tracks, so that they're able to hit these targets first of being a good business, and then also at the same time, just so happens that they're reducing the emissions in on the planet right now. Yeah,
no, that makes sense, and I think that's actually something that I would love to hear your guys' thoughts on as a whole. Is every VC obviously has its different ways of doing it, and sometimes you'll agree, and I'm sure all four of you have some points you disagree on as well. Is how do you think going forward will be the best way that the different climate tech VCs interact with each other, and what do you think? I kind of Tien, what you were saying before is, how would that help, and what do you think is going to be the main way collaboration is going to work in a good front for both the investors and also the companies that are getting invested in?
So you mean the investor and the founders, right? How to get along?
Yeah.
I believe that one of we got four things to do as a VC: raising fund and manage it, invest it, grow the company, and then exit. So growing is the third part and the most important part, I believe. And the tool that we got mostly is a board meeting. We manage the people through the board, because outside daily activities or anything like that, we cannot micro manage them. But the board meeting need to be prepared very scientifically, and also need to focus on the key strengths of many investors in the board. So in here, I got another story. We invested in a company, and the founders really good at technology. They got two founders really good at technology, but they're not really good at business. And in the board meeting is really crazy. So he just asking people like, what do you think about the numbers? But nobody have read it before. So nobody got preparation. They just look at the number, and that's it, just the number. And at the end of the day, we go through like 4 meetings together. And even the investor sitting next to me doesn't know that, the rest of the people in the room. So it's like, you cannot leverage the strengths of people in the board if you cannot, get to know the people in the board. So we highly recommend that the founders need to know how to run the board meeting. And I think the board meeting is the most important things. Other than that, many legal paper is good for us to manage at the end of the day, because we live in the world of conflict, and the biggest conflict is between us and the founders. I must say that at the very beginnings is the marriage, and you see any marriage without argument, right? And conflict. So I think it's a very complicated relationship here, and we need to manage it in the right way with board meeting and agreements.
Yeah, Hashi-san, would you say you were similar? Is board meetings one of your kind of go-tos for reacting with the investors?
I mean, I don't disagree with the idea, but that's not what that's not really what we think as a firm as the number one factor. And that's maybe because in Japan, we are the only one sector focused VC doing this for like 16, 17 years. And we have business experts in the firm. And what makes us unique is that we don't look for companies to invest, but before that, we make our own vision about what business needs to be there first. And if we don't find companies to invest, we even make companies by ourselves. And one of our employees becomes CEO to start a new business and sell the companies to other investors. That's the very extreme case. But likewise, we spend like 1 year or even 2 years before investing to the companies, and we usually make business plans together and spend so many months together with founders and create business together. And so the relationship that we create before making the investment with the founders is very, very rich, and like feels like we're in the same company doing the same business together. And that's how we grow our portfolio companies. And I think that is one of the key factors that our portfolio companies are doing very well in the clean tech market in Japan.
Completely get that. I mean, I think the Japan market is so focused on relationships as well. So completely makes sense why you kind of entwine the two so early on. But I think that's one thing that I said at the start, one of the things that is really important to focus and highlight on is the differences across the region of Asia. Not every single approach works for every single location, let alone sector. I guess, Andrew and Toby, do you have any other different approaches that you use, or would you say that you kind of agree with both of the other two that have been said?
No, I think by and large, yeah, same outlook, right? Just if you want to work with the founders to, I guess, number one, build up their company, and number two, to build up the ecosystem that they are operating in. I think it's very much needed, right? So I think speaking from the position of Singapore, there's a few companies here in climate, a few that we've invested in, and I think it's just being able to have an outlook as to what the ecosystem is looking like and what we can do to take advantage of that. And at the same time, have them be, I guess, champions in this space as well, where they are. So, for example, in Singapore, are companies like Green Lion and Oika, just encourage them to go be active in the space and I guess drum up that interest in this space, for potential founders to come up and build something here, regardless of whatever subsector you are targeting. But as long as it is in climate. Just to showcase that is something that is attractive from a financial point of view, and also has that emissions reductions angle to it as well. So I think just helping them do that, and for us being the, I guess, point of contact for potential founders and our own in this region is something I think we very much like to target and encourage as well.
Yeah, no, absolutely, that makes sense. I guess, now that you've given all your advice on how you would make a successful one, what I think would be amazing is if each one of you could maybe give an example of a successful climate tech investment you've done within your VC firm, and maybe one thing that you said to make it successful, or what was the key aspect that you describe it. I guess, Toby, if you would like to start.
Yes. I was thinking about which example is best. We obviously we've made an exit, but I think that one was more like a capital markets play. So I wouldn't use that like Kaizen Motors, but I'd say, yeah, where I am right now, right? Like their open source carbon capture company called Cool Planet Technologies. We invested in them mid last year. And right now they're sort of in progress already raising the next round at approximately double that. And I think it goes back to the key attributes that I mentioned before. Technology readiness is high because it's not using new pathways. It's basically adopting what's being used for something else. But now CO2 reduction is, you can reuse some other methods that are traditionally useful for and adapting it to this use. So technology readiness is there. I think the key factor for this is because it's the solution is very cost competitive once it's scaled. So we need to do our due diligence around that. I mentioned it's because of its attractiveness, is piloted with one of the largest commercial future potential customers already, who are very happy with the results and basically champion them like out in the market. And I think that also the teams have years of experience from their previous oil and gas days that they're all trying to actively repurpose their skill set for this decarbonization method. And good execution team, strong management, good team composition, and like the policies are pointing also favorable, especially in Europe. And we hope that the other regions would follow suit. And one of the key roles we want to play is to bring some of these technologies over to Asia when the time is right. Yeah.
No, yeah, great, absolutely. And Tien, what about yourself? What would you say is your best example?
Yeah, I think the one that make me the more excited, which is about the traffic jam within our region, right? Every day I come to work, I need to pass through a very long line of cars and also motorbike. Also lead to Andrew's story about two-wheeler. There's a huge market there because the traffic jam is there. So we just invested in the company in Israel, and the solution is the algorithm, AI machine learning that get into the use the camera as every junction, and it make the traffic light have the traffic light make the decision by themselves. So the traffic light can base on the camera and know what flow of traffic is huge and what flow is which way is empty, so that they can pop up the red and green and yellow light by themselves. So they learn every day in every junction, every minute. So it leads to the thing that make me really excited about that deal, because everybody that I ask always say that the traffic light is the most stupid thing in the world. Everybody say that's stupid. Now it's our job to make it smarter. So it's very exciting about that's in journey. And we also recognize that actually we invested in that company in Israel, but the problem is much smaller than our problem. The problem of Bangkok, of Saigon, of Hanoi, of cities here in Southeast Asia, and it leads to our theory that you can get the technology anywhere, but the problem of the climate change is here in Southeast Asia. That make the Southeast Asia uncomparable. Americans will not see the effect, the bad effect like the bad effect like here, like in Southeast Asia. So I believe that we got a really valuable chain that we stand here in Southeast Asia, where everything happened. We are frontliner. And I believe that it is lead to the next stage of climate tech companies in here. And we need to leverage that time, because it's coming.
Yeah, no, completely agree with that. And I must admit, I'm very excited about that. Anything to improve the traffic would be something I'm sure we can all support. No, I mean, I guess, yeah, Andrew, I'd love to hear from Singapore as well in Asia. What would be your biggest example?
I mean, yeah, we've had a few exits so far, right? I mean, I think the biggest one has been Sunseap, which was acquired by EDPR out of Portugal. But I think probably just wanted to touch on something that's successful now, but it's also growing as well, that we wanted to touch on, which is Green Lion. They're headquartered here, founded here in Singapore. Right now I think they just closed their round that we had led most recently a few months ago. So I think overall they're doing very, very well, and in terms of traction with customers, development, so on and so forth, a lot of surprises on the upside, which we're very proud of. But I think the why this is, I guess, successful from my point of view is that it's demonstrating that a company such as that's dealing in very hard tech, battery rejuvenation, is capable to is able to be founded here in Singapore, and thrive here as well. So I think it's very important for the ecosystem, and I think I just want to highlight them, because I think they're sending a signal out there to potential investors, to founders, that hey, Singapore and Southeast Asia, this region as a whole, is very much capable of producing these types of companies, and whose technology is not only able to be used here, but also globally as well. So I think, to me, that's one of the successful ones that we are working on, that we're partnering up with their founders on. And I think if we're able to produce more of these guys in this region, I think it's just better, a big win for everybody here. So all the guys on this call can make more investments in the region. So yeah, I think from that point of view, I think that's what I wanted to say in terms of success of the companies.
No, absolutely. I mean, I think it links back to what Tien said. Southeast Asia is going to be one of the biggest affected with climate change. So absolutely, we're going to be the ones at the core actually improving it. And we could probably list so many startups. And I agree. I think the next 10 years, I think Southeast Asia is going to be one of the biggest for climate tech, and we'll be able to show some really exciting stuff. But yeah, I guess finally, Hashi-san, in Japan, what would you say has been your biggest example of success so far?
Okay. I think one good example is that we found a very good sweet spot of business that big company, for some reasons, didn't come in, which is the electric vehicle market. And surprisingly, there are 10 big car makers in Japan, like Toyota, Nissan, Honda. They're not making EVs in Japan and not selling EVs at all in Japan, which is strange. Although they're selling EVs outside of Japan, they're not selling in Japan. Especially there's a big demand from the logistics market, that they want electrified commercial vehicles, but no Japanese car makers are making any commercial vehicles in EV. And I mean, there's big demand, there are buyers, but no product. I mean, it's so obvious that if anybody put EV in commercial vehicles, the business will be so successful. And we found a person who has been working on lithium-ion battery technologies for 30 years and knows about batteries, like everything about lithium-ion batteries, and who's even helped starting the battery business for BYD, ATL, LG, Samsung, and like he literally built like manufacturing plant for those battery manufacturers today. And he was just wondering, like, if he utilizes his know-how of battery management to make EVs in Japan, what happens? And that's what he did 4 years ago. And he started making electrified buses and trucks. And like his company is the only EV bus manufacturer in Japan, and taking all the electric bus tenders in Japan at the moment. Like he's getting like hundreds of orders every month. And I think finding the real sweet spot that no competition is there was a big success.
No, amazing. I think that's something that we can all probably agree on this panel as well, is that it is actually the startups and the smaller companies that seem to be really having that cutting edge technology, being able to disrupt the market, which I think is just amazing to see. And now, obviously, I've been able to say all the positives, and I think we can all agree on this call that the climate tech market is, booming, but unfortunately, nothing is ever that easy. I guess, what are you guys thinking is going to be the biggest challenge in the next 5 years for investment within climate tech, and especially within Asia? What is going to be maybe the biggest thing that you're predicting is going to be hard to overcome?
I think part of the reasons that some of the technologies are not that is the price of diesel in parts of Southeast Asia is still very low. So it doesn't make, so I'd like to definitely see more policy like support. And I think definitely more education amongst the investment community in this space, because I think we are 10 or plus years behind in terms of in sort of not just investor, but just general sort of awareness of the topic. So when I was in the conference in Europe just now, I just felt, wow, people actually understand what I'm talking about. Where I was thinking, well, at least like I felt like always like the weird kid like at school. So I think a lot more events and curating like ecosystems and getting together like what we're doing now would be great. And also I think like lack of early stage funding as always, because all these funds have been raised, traditional VC funds have gone bigger and bigger. And so the minimum ticket sizes are like too big for a lot of these like companies that are emerging. And climate tech, as we're here to talk about, it's just emerging, right? So I think more of that early stage capital, people who are willing to take that leap of know more about sort of deeper science and chemistry, that have more confidence in investing in these companies would be great.
Yeah, definitely. I guess, Tian, I think were you about to say something?
Yeah, I agree with Toby. It's like because the risk is really risk. What we try to do here is, four guys here as risk takers. We take too much risk in this game. Climate tech is there, but the company, we can save the company or not, we don't know. None of us know, I believe. So it leads to the next challenge that is harder for us to do fundraising. And LP always tricky about this one, and climate tech is there, but it leads to they need to do a lot of DD with our fund and a lot of things like that. So even though that everybody like to do the same things, but maybe the LP need to steer the VC firm into the way that they like, So it's like I believe that first of all is fundraising will be harder. The next part is that education need to gain more, adoption. And anyway, climate tech will become the next mainstream things. But until it's not mainstream, it's still niche. We need to suffer, So I believe that we need more education on that. Totally agree with Toby. And the last part, I believe that more regulation for VC, for example, tax incentive, tax on capital gain, things like that. It will lead to more VC fund, more funding, and we can solve the first problem with more regulation from local government or regional government. But I believe that we need to raise more ideas about this, because anyway, if we can make climate tech mainstream things, that means that they can create two things once in the at the same time, profit and also the good environment. Oh.
Absolutely, absolutely. I think, that's spot on. I think one of the big things that both of you guys said there will be that regulation, bringing the governments in, they'll be able to increase education or, on a widespread. Someone from the UK, I've seen the petrol and diesel prices a lot higher than in Southeast Asia, and that is definitely a financial thing is going to be a big part of it. So I think it'll be really exciting to see what can be increased from that side. But that's great. Look, this has been an amazing panel. I think has shown the success and the future of what investing can be. We have actually got time for one question from the audience, which I believe we'll be able to pop up on screen now. Any of you guys can answer. We'd love to hear your thoughts. Let me just try to. Okay, so I will just read it out as for it, but the question will be looking at the more sustainability side of within it. How do you think about these startups reaching valuations that are comparable to software companies, which often tend to be a lot higher? Since climate problems are very physical, scaling generally requires substantially more resources and capital, and EBITDA margins are traditionally low as well. So the maths can be different. Is there a different approach you would all adopt to think about these investment opportunities?
If I may jump in, I think that's a common it's a fair sort of comment to make, but I think from what we're seeing from the front lines, because of how well these, we want to pick the winners within these categories. What we're seeing, the EBITDA margins are very high. I should have success of AMPD Energy from Hong Kong that replaces diesel generators with battery powered solution construction. It's the EBITDA margins are 30-40%, just because of the efficiency of their solutions, and they're improving and constantly driving costs down, etc. So I think there could be resource capital intensive depending on the type of problem, but like say, for example, Greenlight, as I understand, that's also a modular approach, and you can commercialize quite quickly. There are bigger infrastructure funds that do fund sort of the more centralized capex, heavy, like a $3 billion hydrogen plan or etc. But I think from the venture perspective, at least from where we look at it, they are physical, but the solutions themselves could be from a few $100,000 to a couple, and often there is a financing market that's developing for it. So yeah, those are sort of my comments. Yeah.
And Hashi-san, would you agree to that? Would you say it is a bit of a misconception within the field?
As said a number of times, like we are sector focused, and we think we know about the business very well, and sometimes better than other people. And what we've learned is very simple and nothing new, but the earlier we invest, the better performance we get. So we usually are the very first investor for startups. So whatever the valuation that the company gets after IPO and M&A, the investment multiples are very good for us because we invested when the valuation is very, very low. And I think the key is to invest as early as possible. And I think the cleantech or energy-related companies, I think, has relatively lower valuation compared to software companies or light asset business models, I think.
If I may jump in, actually, we invest in that company that I mentioned, that story. And anyway, they're a software company. They build their algorithm. They do not use hardware anywhere. They just block that algorithm into the camera available in any junction. So what I believe is that we cannot compare software company and climate tech company, because anyway, it can be a software company. It does a software and can solve the climate problem, right? So I believe that everything that can scale, and how big it will scale is the question. So I don't think that we should compare. And anyway, it leads to the biggest thing is that it's not about value anymore, not about valuation anymore. It's more about how much we can create for the environment, and how much we faster we become faster in the fight against climate change. Because I believe that we way behind. The 1.5 degree is there, and we way behind. we need to do faster, more agile.
Absolutely. No, I completely agree to that. And I think that's exactly right. I mean, the variety all of you guys have spoken to about the climate tech sector, you know, some are software, some are hardware, but the key aspect is what I think you've all been saying is the past 5 years, it has actually, it's increased in size, but also in time. You're getting that commercialization a lot quicker, which is allowing those VCs to be able to invest more and grow within those businesses. So that is brilliant. Well, look, this has obviously been, you know, really, really useful, and I hope the audience has enjoyed it. Want to thank you all for again.
If I may get the ideas from Andrew. He may got some.
Absolutely. Andrew?
What do you think, Andrew, about that?
Sure. No, I mean, I think I'm in agreement with you guys in terms of, you know, you can't paint the sector with a, you know, a broad brush like this, because climate tech involves a whole bunch of stuff, right? I mean, just looking at our own portfolio, we have, you know, software only companies, we have hardware only companies, and everything in between. So you just can't say, hey, what do you guys think versus software companies, right? So case by case basis, sector by sector basis, and you know, I think we just make that you know, logical and I guess analytical call there. You know, if it's reasonable or not, and if there's going to be an attractive return for us when we do invest at that whatever point it is. So no, I think that's sort of the gist of things. You know, just you know, the long and short of it.
Yeah, definitely. I think that's the best way to end it. You know, whatever the future holds, it shows that the you know, the climate tech is very varied and very diverse, and that the opportunities there are pretty much unlimited. And I'm really excited to see all 4 of your businesses kind of grow, and hope climate tech becomes mainstream for everyone. But yeah, thanks so much for your time, guys, and I hope everyone who watched this and enjoyed.
Thank you.
Thank you very much,
Take
everyone.
care, guys.
Bye.
Bye.